The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 10th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I hope that each of you are off to a great start for your day. And if you're not, let's simply make sure that you and I, we do all that we can do to have an extraordinary Wednesday, a wonderful Wednesday. You know, I'll do everything I can during the next hour out here, and that's to share with you extraordinary tools that help us identify where price is headed to, because that is important to us. We'll take a look at it on different time frames out there. Of course, we can take a look at your specific time frame, your specific stock, and apply some of these great tools like that lightning bolt pattern. We can go looking for those A to B equals CD patterns. We can go take a look at Fibonacci expansions and retracements. We can go take a look at Japanese candlestick charting. Anything that you would like out there, just give me a call, 877-927-6648, or internationally, 727-445-1044. You and I, we can go on a safari. We can go hunting for bulls and bears. We don't even have to pull a trigger out there. We don't even have to harm anyone. We can just go see where they are hanging out. You know, Marcus Aurelius, he believed that happiness in our life depended upon the quality of our thoughts. Think about that. In fact, Napoleon Hill, he went on to say that our thoughts were the one thing that you and I, that we could control out there. And he went on to say that our thoughts, positive or negative, well, that's what we attract into our life. So, folks, it is Wonderful Wednesday. Make sure you have a wonderful day, and make sure you are thinking wonderful thoughts out there. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow is off just slightly, down about 8 points right now. Trade out at 17,006. NASDAQ Composite is flat out here. Trade out at 45.52. S&P off 2 points. Trade at 1986. You've got the DAX in Germany off 23 points. The FTSE down 8 out here. Gold is up $2. No big deal out there. Trade out at 12.51. Silver, hi-ho silver up 9 pennies, trading out at $19. Platinum up $11 out here. You've got, let's see, inside the ETFs, you've got the SPYs off 18 cents. The Qs are flat. IWM down 8 pennies out here. King dollar looks like it has taken a little bit of a move. Was up earlier, down just a tad. Of course, maybe I was looking at the wrong thing. In any event, I'll leave the charge here to the upside. Ticker symbol RC. PT. Go grab your receipt out here. It's up 12% out there. It's down $5.90. Palo Alto Networks, PANW, up 7%, up $6. Land's End having a nice move, up nearly 14%, up $4 and change. NPS Pharmaceuticals up 16% out here. Natural Health Trends up 28%. Priceline up $3. United Therapeutics up a couple. Medvation up $2. Twitter up $1.90. U.S. Silco Holdings up $1.84. To the downside, VIP Shop Holdings, VIPS, is the ticker symbol off 3%, down $6 and change. Tesla, TSLA, down $3 and change out here. Avalon Bay down $3 and change. Google off 3. Monsanto down $3. Baidu off $2.70. Mobileye off $3. Google down $2.30. Auto Home down $2.71. All right, so where do we begin? Let's begin by, let's take a look. Let's try to keep this relatively simple out here. Let's take a look at a couple of different areas. We've got our NASDAQ Composite. That's the chart that's up on the screen out here. And as we take a look at the NASDAQ Composite, what we notice here is that yesterday we actually saw the summation index tick down. That is a indication of a change in trend. Likely price target out here, 44.85 as the next price target. If you break back into the consolidation, then you move down to 48.20. So we do have signs of weakness inside the lead dog in the hunt out there. If we go take a look at the New York Stock Exchange, the NYSE, that was showing us some nice declining tops in its price oscillator out there. In the past, that has always led to some type of retracement. This time should be no different. In fact, it is no different as we speak right now. That price oscillator needs to probably get down to about the 300 level in order to find some type of a decent bounce that could be forthcoming out there. Otherwise, what we should expect is we should expect price in the New York Stock Exchange to move down into the bottom of its rising price channel. Of course, if we take a look at retracements, we'll go from that swing point low from August 7th to the high, which did test its most recent high, and it failed up there to at least pull back into 10,768. That's your 0.618 retracement. Today's level, though, 10,897 is the area to be paying attention to. That's your dead cat bounce, your 0.382 retracement level. I suspect is more likely 10,768. Or so is where that is headed to. That summation index is turned down. That says the bears have control of the market. If we take a look at the Dow out here, the Dow is summation index turned down. What does the Dow also have? It has this 3 drive to a top pattern that had formed and confirmed on July 17th. We never saw a close above that. We saw a minor blip, a minor test of that area. That pattern remains in full effect out here. Now, inside of the Dow, what it's really setting up at this stage is a consolidation move. A consolidation move, that takes us back here into the trading session from April the 25th out there. That's the bottom of the consolidation. The top of the consolidation, 17,151. So you're going from 16,333 up to 17,151. You're looking at about a 700, 800-point move out there, basically, inside of the Dow. Pretty good chance here, if this is the consolidation run, that you'll see price move back to the bottom of the consolidation, right around 16,333. Stops along the way to let off passengers? Well, that's pretty simple. We can take a look at the 0.382 retracement level. We're going to try to look at the 0.382 retracement level as soon as Stevie learns how to work this little mouse out here. There we go. Dead cat bounce says 16,845 is in its cards. And then we'll let some people off the elevator. Then down to the 0.618 area at 16,649. Nice big consolidation pattern that has now formed and confirmed inside of the Dow. Any break topside or downside of this level, you'd have to say that you've got that same 800-point move. So you've got the summation index turning down in those 3 indices out there. It is worth paying attention to. Number 2, you got that VIX index. That's trading above the 50-day exponential moving average. So long as it holds 1280, markets will move lower out here. So we'll be paying attention to that. What could get in the way? I didn't mean to minimize that stock chart out there. Well, there are things that could get in the way, but those are really the levels that we want to be paying attention to as we speak. Let's go take a look at some things that we did not take a look at, didn't get a chance to look at during the first show. Let's go take a look at Goldilocks, see what gold is doing out here. We take a look at gold. Number 1, it's on its way to complete a 1 to 1.272. A to B equals CD to the downside. That A pattern or A point is the swing point high from July 10th. The B point down here is on August the 1st, and the C point is on August the 8th. This is setting up for a nice buy-a-rooney. I am sure that we're going to see the large commercials, that we're going to see them evacuate those large net short positions that they have had in place for quite some time. They were the ones that were signaling lower prices in gold, and we won't have that information until about 3:30 or so on a Friday afternoon out here. Now, where is it that likely prices are headed to? Well, right now we're trading back into that cluster of swing points, that bullish pattern out here that had formed. This was the University of Miami pattern out here. That is a Japanese candlestick charting pattern that evolved after Japanese candlesticks were created out here. Why do I say that? Because it looks like the U of M logo, and if you had an automated system, it wouldn't pick this pattern up. And that's where you see a move down like this on May the 30th. In this case here, you had 3 days of a sideways move of narrow-bodied candles, and then, ba-boom, you had that move up on June the 5th. This is the exact same pattern that made the lows in March of 2009. There were many lows, many patterns that were forming in March of 2009. This one here was the coup de grace. This was the one that gave you the signal that the bulls were then ready to make a move. And that's in essence what we saw inside of gold. Now, what does that mean? That means it's important for Goldilocks to be able to hold this area. That's the June 3rd level of 1241. You are trading, as I say, into that swing point specifically from June 3rd out there, the top of which is 1241.70. You have tested that area. You didn't test it. You got to 1246.40 out here. No bullish reversal signal in place as we speak. If this level fails, well, you got a very significant bullish area that has failed. What does that set up? That sets up your next A to B equals CD pattern to the downside, with your A point being out here on March the 17th, your B point being that University of Miami low pattern, and the 1-to-1 would take it to the 1198 area. 1158 is your 1-to-1.272 level out there. At 1198 takes you all the way back into the December lows. If that were to fail, and I don't suspect we're going to see that take place, but you know what? I'm sitting here waiting patiently to see some type of reversal signal. So right now, we got to take things one thing at a time, one day at a time. And these lows out here in that June time frame are muy importante for us to be able to watch out here, because if it breaks that area, then that really sets into play at least that December 31st level. That's what's going on inside of Goldilocks. If we take a look here at silver, hi-ho silver, that's up 8 pennies this morning, trading out at $19 even Steven, as we wait for the stock chart to populate here. Come on, baby, do it for us. We're on live television out here, and people want to see the beauty of your stock chart. Here we go. Now, if we take a look at hi-ho silver, we're going to see silver certainly weaker than gold, and of course, what does that mean to you and me? That means you'd actually like to see the weak link give us the first bullish reversal signal out here. And we do not have that as we speak today. You've got silver trading back into the May 30th low. That swing point low is 1870. The high is 1915. 1870 is very important as well. Volume down there, I don't think I got the right volume. Nah, I don't think... I don't have the right volume, that's for sure. That's because I've got the December contract up on my screen. Nonetheless, that is where price is likely to head down and test. That's going to be those lows from 1870 out there. Now, this was a straight line move. You really can't come up with any kind of A to B equals CD pattern of any merit out here. But a break of these lows from May, that'll set up a move down to the low that was put in on June 28th, right around the 1850 level. That is what's going on inside silver. If we take a look at light sweet crude, down 66 cents right now, trading out at 92.09. If we take a look at this does have A to B equals CD patterns. It's likely headed down into the 88 range out here. That's a set of swing points that takes you back into the January time frame. We take a look at its A to B. It's lightning bolt pattern out here. That means we've got to come take a look at the highs from June 23rd. That's your A point, your B point, down here on July 15th. Not much of a retracement, a 50% retracement into the C point that was created on July 22nd. Looks like light sweet crude headed to 90.36. It's 1 to 1.618 retracement level. Right now, we've got the Dow off 11, S&P down 3. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off about 19, S&P down about 4, composite down 4 as well as we speak. Russell 2000 up a couple points. Let's go check in on some of the ETF structures out here. Let's go take a look at the SPYs out here. You've got the SPYs trading up 33 cents as we speak. They're headed for the 197.78 area out here. That's the market profile, though, so that's going to be your first target inside of the SPY. If we see a break of this, a daily chart that we're looking at on our screen out here. We had volume move down yesterday with 88 million shares out there. That's after making a high with 85 million shares. So volume yesterday, just kind of normal out here. Nothing too shabby. We've been trading for just under an hour, and we've seen 16 million shares. So it takes 16 times 6. That'll get us about 92 million shares. So you got, looks like, and that's straight line math. That's not, and it should be 6.5 hours, right? But I can multiply times 6, trying to do 6.5. Bottom line on the show. I probably could do it, but I'm not going to. In any event, we want to be watching for is what happens at that 197.78 level. Of course, it gets back in the lower part of its range. It's doing that right now by getting back below the July 24th high, which is 199.06. You're trading at 198.92 as we speak right now. That's what's going on inside the SPYs. If we take a look at retracement levels out here, normal retracement, say say you get down to the dead cat bounce, the 0.382 area, that's 197.37, and 194.76 is your 0.618 retracement level. Expect those numbers to be hit out here inside of the SPY. If we take a look at the Qs, we're going to get our Q from the Qs out here. We get that Q perhaps today, perhaps tomorrow out here. What we want to watch inside the Qs is the level of $99, even Steven. That's its market profile low. You break that, that'll be the first time we've seen a break of that area coming off the lows back here in August. In fact, you can go back even further, but certainly that would be a break of those lows coming back to August out there. So $99, even Steven. Now, interestingly enough, the Qs here had a key reversal session yesterday. They had it back on September the 3rd out there. So we've seen significant resistance up at these highs. Inside the Qs, resistance anywhere between 100.34 and 100.46 out there. That's resistance. You get it close above that, that would signal that you've got some real buying power in place inside of the Qs. It's all going to be about the Qs. It's all going to be about the NASDAQ. That is Steve Rhodes' opinion out here. So watch that $99 level. If we take a look at the IWM, the Russell 2000, off 14 cents right now. The IWM is trading out at 115.05. 114.77 happens to be its market profile low. So a crack of that area would tell you that the sellers are back in control of the small caps. Of course, we saw a nice big old key reversal session. That was on September 3rd, so its resistance area, and that was after a 1 to 1.272. A to B equals CD. My clients and I, we sold that D point, and that's what you want to learn how to do with that lightning bolt pattern. You want to learn how to buy and sell that D point, and that's what we did. We sold that D point inside the Russell 2000. Now what we're watching, we're on 114.77 stop out here. That's going to be an important area for us to watch. Give me a, let's go check in on the, oops, I almost grabbed the wrong button out of it. Let's go finish this off and take a look at the diamonds out here, the DIA. That trading session is at, right now, 170.05. And its market profile low, its level of support is 169.54. Now, volume yesterday on the move down, yeah, it's so big. 4.2 million shares to the downside out here. But what do we know about the Dow? Hey, look, on the Dow, we know we still have a 3 drive to a top pattern that is activated, that is active. And until that level gets taken out, it's got bearish connotations. What do we also know? We took a look at this inside the actual Dow. We've also got a very large consolidation. That consolidation inside the actual Dow diamonds, that takes us back into the time frame. Right here really takes us back into the time frame of April the 16th, April the 15th out here. So the bottom of the consolidation is at the 162.93 area. The top of the consolidation box, it's at the 171.32. So you got a 162, 170. You got a 9-point consolidation out here inside of the diamonds. Pretty good chance that the market will move down into the consolidation lows out here, the 162.93. That looks like the more likely pattern that would be in play. We're going to need some more volume to the downside out here, but it is Wonderful Wednesday, and anything can happen on a Wonderful Wednesday. When we get back from this break, let's go check out some of the sectors inside the S&P 500. Let's go see how they're behaving. Right now, the XLF up 7 pennies, but the energy sector just taking it to the mattresses, down 93 cents. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to wonderful Wednesday here at TFNN. We've got the Dow trading down $21 right now. Composite off 2, S&P down 3.5. Of course, let's go take a look at some. I mentioned we would go take a look at some of the sectors inside of the S&P. So let's go do that, and then we'll come take a look at a couple of other things. Don't forget our call numbers 877-927-6648. We got the XLF out here. The XLF is right now. If we take a look at what it was doing yesterday. Let me pull this back out here. So the XLF makes a little doji high out here on the trading session of September the 4th out there. Volume up there, 25 million shares. Yesterday pulls back with 31 million shares. The last time that we saw any kind of move down was 20 million shares back here on August 28th. So you got a slight tick in volume to the downside inside of the financial sector. The key level for it to break through, bust through, is going to be $23.12 out here. Until it does that, it has not really given us a clear sell signal. Although you had a slight increase in volume yesterday, but nothing that was huge out there. That's what's going on inside the XLE. If we take a look at that's the XLF, my apology. Let's go take a look at the energy sector. Energy sector on the other side is just dead meat out here. You've got the energy sector. It's now trading below its market profile. It's trading below a swing point that has a volume of 13 million shares so far today. You're down with 3.7 million shares. Yesterday, 10 million shares. Well, guess what? You got volume accelerating inside of the energy sector to the downside. What does that set up? That sets up your A to B equals CD to the downside. What will that give us as a price projection? Well, we'll use that doji high from June 23rd. We'll use as our low out here August the 7th, and that'll be our B point. And our C point looks like that's probably the August 26th time frame. You're looking at a price projection of 91.84 at a minimum. 91.84, 89.93 as its next target. If volume continues to accelerate to the downside, I'd say the 89 level more likely the outcome inside the energy sector. Let's take a look at the building materials sector out here. That's off 40 cents right now, 2.8 million shares today to the downside. It has broken through its TAS market profile low out here. It has not broken a swing point to speak of. If we take a look at retracements here from its last set of swing points, that would be the August 1st level into the high that was put in here on September the 4th. You can see you're below the 0.382 retracement, so we ought to see 49.31. Volume yesterday, 3 million shares. Today so far, 3 million shares. The materials sector getting the kibosh. That should suggest to us that instead of making the 0.618 retracement, probably gets down and makes that 100% move of a move and gets you back into the August 1st level, right around $48.38 out there. Let's take a look at the healthcare sector. It's a strong one, the XLV out here. It's fighting the turn. Is there any kind of sell signals inside of the XLV? And the answer is there is not. If we take a look at it right now, just really trading sideways. So the energy sector looks to be about the strongest sector out there. If we take a look at the XLK, I don't think, why don't I got that out there? Let's just change this up. Let's put in the XLK. Let's go find out what she's doing. Off as only 7 pennies out here. So you've got really the top 3 sectors inside the S&P 500. They are doing what they can to buoy it. At this stage here, the XLK, it needs to crack 39.66 before it provides you with any kind of really, well, I won't say a confirmed sell signal. You got that yesterday. And yesterday was that key reversal session inside of the XLK. So you got your resistance level is $40.54. Trading out right now at $39.99. $39.66 could be a key level of support. Let's go over and take a look at some patterns inside, some of Stevie's favorite patterns inside of the markets out here. Let's go take a look at the S&P. So we're just looking at the S&P and the S&P sectors. We might as well stay with the S&P. And let's go take a look at our 5-hour energy drink out here. We take a look at the 5-hour chart. It's got one of Stevie's favorite patterns when things get so stretched. You see, the market is nothing more than a rubber band. It gets stretched in both directions out there. And when we take a look at those stretches out here, you can see on the trading session from 9 a.m., this is a 5-hour chart we're looking at. This happens to be on September 3rd as the highs were being made. It was doing it with less relative strength out there. And then what do you have take place over the next 5 hours? You see a nice big old bearish engulfing candle that forms out there. And then you see a move lower into the 5:15 time frame, that great Who song out there. And there was your confirmation. We have not seen those highs taken out. We are seeing from a Chapman wave count right now, we're down in the 5th level of that move to the downside out here inside of the ES Mini. With more to come out here. So we are seeing a topping pattern. Hey, why is that important? Well, folks, if you come back and you just simply traded the patterns, you traded them properly, and you take a look at what was going on when the sky was falling apart as the market was moving down at 4 a.m. on August the 8th out here, guess what we had? We had the same kind of a pattern. Now, back there, it went to that 7th wave of a Chapman wave pattern. We had a price relative strength divergent pattern. It was followed up with a bullish engulfing candle at the top, a bearish engulfing candle. Do you think it's important to read the signs that the bulls and bears make for you and and I each and every day. Let me tell you, folks, I don't know where you're at in your trading, your technical prowess out there, but what you want to learn is you want to learn the signals that the markets leave for us. It really is just learning their communication. Hey, if you looked at this and you didn't know anything, and you know, I remember the first time I looked at a stock chart, it was like, what the heck? And I didn't use the word heck. I said, what the heck does that all mean? How am I supposed to figure out anything that's inside there? But then, you know what, we got all these great technical resources here at TFNN, and that's how you can learn, and all kinds of great books out there. And all of a sudden, these charts can look like just beautiful canvases to paint on, because they're always providing us with information out here. So you want to pay attention to those types of lows and those types of highs. That happens to be the 5-hour energy drink chart for the S&P. So even though the S&P is holding up nice and strong out here, which it is, it's still giving us a nice topping signal, the same kind of signal that we saw down at the August 8th lows out there. And that is something to think about. Now, let's go see, is there any kind of topping signal inside of the NQ? Well, let's just switch over and take a look at the daily chart. What do we see take place inside of the daily chart? Now, you're seeing some of the colored Rhodes momentum indicators out here. You know, we're all visual. It makes it pretty easy just to kind of keep it simple. Red says you are in a definite sell zone. When you get to blue, you've got some blue skies. That means that you've got a change in trend and your buying opportunity, and then you get to that light blue skies out there, and that is, a step on board. We're going to go check out some rainbows out here. Now, what do we have? We just took a look at the 5-hour chart inside of the ES Mini, and we saw how that put in a nice, one of my favorite patterns out there. Well, guess what happened yesterday on the way up inside of the NASDAQ on a daily basis? It made one of Stevie's favorite patterns. It was moving higher, and it was doing it on less relative strength, gave us that reversal candle. So far today, you got a bit of a doji candle out there. You'd like to see a lower close inside of the NQ on the daily charts in order to confirm that pattern. But, hey, folks, the same type of pattern that existed at the lows now is at the highs, and it says we've got to pay attention to it. If we go take a look at the Dow out here, well, the Dow, let's go see. Let's take a look at the Dow. Let's go look at it on its 5-hour chart out here. Now, inside of the Dow, what kind of pattern did it make at the lows? If you're watching this on Tiger TV and you're checking out my cursor down here, down at the lows back on August the 8th, yeah, they made the same kind of pattern that we've got out here at the highs. That was also on September the 3rd out here. Now, what are we seeing? And what was also going on? You saw this real bad, bearish type of looking MACD pattern that was out here. So you got a combination of tools. And as the market was moving sideways to higher, it was saying, not so fast out here. So we've got the change in trend in place as we speak right now inside of the Dow. And that's what we're doing. We're just simply paying attention to the current patterns that are out there inside of the marketplace. So those are our signals. Of course, we've got the good old VIX index here, volatility to the upside. VIX index trading at 1395. It's where the carnage is done inside of the market. So then you say, hey, what's likely to happen? Well, we're likely to see some kind of move lower on some type of intraday chart out there, some type of similar pattern, some type of price relative strength pattern out here that actually came in play yesterday as this 30-minute chart now for the ES Mini. So how is it that you play it if there's a change in trend? Well, you go ahead and you sell some kind of a bounce, right? And if you take a look at what's going on right now inside the ES Mini as it was moving lower into the 2:30 p.m. time frame yesterday as the ES Mini got down to a price point of 1983.25, you might have said to yourself, and price bounced off of that area, why did it do that? What the heck was going on there? Hey, take a look at that little candle that you had at the 4 p.m. time frame, and then going into the next 30-minute session, it actually is a bullish reversal signal. These three candles here, that's referred to as the morning star. That says that these lows here, which have been tested, thus far have held. We know where the bulls are hanging out. They're trying to support the low of that session, which happens to be 1983.25. What is it we want to pay attention to? 1983.25. You see a close below that area. It starts to get bearish out here. As we speak right now, we got 15 minutes left in this trading session. You can see that price had also moved lower with less relative weakness out here. Do we have a bullish reversal signal? Well, not just yet. We got to wait another 15 minutes, but you're in the process of trying to form a hammer candle down there. And that hammer candle says that level here of this 1983.25 is a very important area of support. Now, I don't know if it's going to be a hammer candle or not. We just simply have to wait for another 15 minutes to see what kind of candle gets formed out there. But this could set up a nice little intraday bounce that somebody might want to consider selling into. And that's what's going on its 30-minute chart out there. If we actually take a look at counts to the downside out here, and we come off of this most recent, let's just take it down from here, this high, which was at about 7:30 in the morning. You've only made it down to a C count, so only the third of at least 4 waves to the downside out there. So it would suggest we've at least got one more push to the downside intraday here. That's what's going on a 30-minute time frame chart. Let's go see what's going on a 30-minute time frame chart out here for the NQ. And the NQ out here still being able to hold this 4,057, 4,059 level. That's its market profile lows. That's really what we want to be watching for is, in fact, I don't recall if I did that during this show. It might have been during the last show. Let me just switch over to the 4 time frames. It's inside the NQ. As we pointed out, this is an important area to watch. 4,059, 4,057, 4,053. Yeah, you've got all 3 of those, but that's because of the different time frames that we are looking into as we speak right now. Now on the 30-minute chart, just a little bit of agitation, meaning that price has moved up now into overhead turbulence, and that happens to be the market profile high right around the 4,067.25 range out here. So it is all going to be about the NQ. If I take a look at the Dow, let me go see what's going on inside the Dow 30-minute chart out here. Any kind of patterns to speak of? Oh, that's interesting. Let me see. Where did I start that move lower? Inside, that was all the way. Yeah, gee, that's not the right one to use out here. Instead, let me just clean this up just a bit. And I would say you'd come down. So you can see inside the Dow here also, as I was making that low at 2:30 yesterday afternoon, we did get a little bullish reversal signal, and it says that this low inside the Dow futures, which are under attack right now, that should become good support. And that low is the low of that 2:30 session, and that low out there at 16,985. You're trading at 16,984 as we speak right now. This is a 30-minute chart that is on our screen out here. If we come down off of this level right here, give me a moment, and start our little count tool. Nope, so you wouldn't be down there because you'd come right from, you'd have to come from up here. It's as simple as that. Why isn't it doing it? Come on, baby. There we go. So it says you've made that 4th wave down during this session right here. So we want to be paying attention. So the reason why we want to pay, again, a 30-minute chart out here. You're holding support. It's where you could see a bounce. Where would you see a bounce inside of the Dow out here? I would say you could see a bounce into about the 17,023 range. So you're trading at 16,987. So if you're asking where is it that you'd sell from, you'd sell from about the 17,103 to 17,013. Did I say that? 17,013 to 17,023. So inside that 10-point level out there, that's what you would be looking at for potential sell areas inside of the Dow futures out there. Let's go take a look at what's going on in a couple of stocks out here. Let's do that by taking, I want to go inside the sectors. Let me see what we've got that's holding up well inside the sectors. Boy, take a look at that financial sector. It doesn't want to give it up. That's a top 10 holdings. You may not be able to visibly see it on my screen out here, but the top 10 holdings, meaning Wells Fargo, Berkshire, J.P. Morgan, Bank of America, Citigroup, Goldman Sachs, MetLife, U.S. Bancorp, AIG, American Express, all in the green out here. 877-927-6648. Unlike the XLE, all 10 of those holdings in the red. Look right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 30. S&P is off about 3 points. NASDAQ Composite still the one that is got some strength, meaning that it's holding its support level. So that's really going to be the key for the day. I know I've said it at least 8 times. I think I should say it 10 times. So the real key for the day is going to be the NASDAQ Composite. If we see that cut loose out there, then you really start to see some momentum to the downside. I mentioned that the mentioned that inside the energy sector that they were having some troubles, but you've also got some troubles inside of Monsanto land. Monsanto right now has got enough volume to be able to take out a B point of an A to B equals CD to the downside. That would be the trading session that we're looking at is August the 1st, 2014. So it's already trading into that. That's got 4.2 million shares. Let me make this a little bit larger for you at the moment. It's already got 3.5 million shares. We've only been trading for an hour and 25 minutes. So Monsanto's got some issues out here. If it takes out that B point, meaning if it closes below the 112.13 level, what you're looking at is a confirmed, then you would have a confirmed A to B equals CD to the downside. You're trading into a swing point with volume. Even if it doesn't bust it this morning or bust it today, it says that price will at least be back down to the try it again. If it does break it, it says you're looking at 104.57 to $100 even Steven out there as your price projections inside of Monsanto. 104 takes you all the way back to the swing point from February of 2014. So there's some problems out there inside of Monsanto. Let me see, what else do I see out here as I scan the sectors or the top 10 holdings inside the sectors. Caterpillar struggling this morning. It's off 1 6/10%. Let's go see what Caterpillar is doing out here. Caterpillar, again, it's a daily chart that we're looking at. Cat gaps down here this morning. Volume behind it's moved 2.5 million shares. So gapping down. This thing has got likely going to head all the way back into that August 1st time frame as well. That has volume down there, 6 million shares. Today it's already at 2.5 million shares. So problems with Caterpillar. If we take a look at, let me see, what else? I'm just looking percentage-wise for anything of significance. So we got Monsanto. We got Caterpillar. How about something of significance to the upside out here? You've got, see what's doing well. How about Walgreens? Wag the dog. Walgreens, WAG is the ticker symbol, up 0.6%, up 40 cents. Let's go see what's going on inside. Oh, Walgreens. No, it's up 40% up here, but 40%. It's up 4%, but no big deal. Walgreens has got some major issues. It's got a huge supply line that took place on August the 6th. I don't remember if they bought somebody out or what they did out there, but I think it was a Canadian company maybe, right? Anyways, doesn't really matter. What we know about Walgreens is 84 million shares to the downside. It has a high volume low. At some point in time, that's going to be tested. That's the price range of $57.75. She's trading at $63 as we speak right now. A continued scan to see if I can find anything of significance. With Amazon, I talked about that earlier. Price line is up 0.5%, not a big deal. You've got inside the healthcare sector, which is so strong right now. You've got Celgene is up, Bib. Biogen, Bristol Myers is up 1% out here. Gilead Sciences, GILD. Folks, in life, what you got to do, what we all need to do is just simply shoot for the moon. And the reason is because if you don't get there, at least you will be a star. Well, you want to talk about shooting for the moon? That is Gilead Sciences out here. I'm guessing that this was not a data feed issue. I don't know what happened on September the 5th out here, but you should see Gilead Sciences go ahead and try to make a run for its highs one more time. That's at the 110.64. Well, folks, it is Wonderful Wednesday. That means we got our man Basil Chapman, and then in the on-deck circle, we got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. Thanks so much for tuning in. Have a great Wednesday, folks. I look forward to seeing you bright and early tomorrow morning. Take care.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
This is TFNN.